Hello and welcome to another update video about Bitcoin. I've made a few changes to the chart just to simplify it a little bit, and I think it's actually more accurate. The thing is, due to the latest price action, I wouldn't say convinced, but I think it's fairly likely, and there's definitely a case for it, that this entire move down is an ending diagonal, highlighted here in red, A, B, C in a wave 5. And that due to the choppy price action, that is just for me now the most likely count. It doesn't make a great difference here, but it means that to the downside here, this could become a bumpy ride. What does that mean? It means that the fifth wave, which will end the bear market, or should end the bear market, is a 3-wave move. So I did explain that or talked about that already in the previous videos. Here the wave A, 3 waves. Well, no, it's a 5. The wave A itself is a 5-wave move, but the wave 5 in itself consists of 3 waves, which is here the wave A, the wave B, and the wave C down. Okay, so 3 waves. What interests us at the moment is the wave C. So the wave C in itself is a 5-wave move. A wave C always is consisting of 5 waves. If we now take a look at this, this is basically unchanged. Here the white wave count, but I've taken out the yellow count. Don't worry, I'm not going to show it to you because I took it out anyway. It doesn't really make a great difference. It just simplifies the chart a little bit. It means still that we came down here in a wave 1. We moved up in a wave 2. We are now coming down in a wave 3, either now or there will be another move up before we come down. And then there will be a 4 and a 5, all within a wave C of a wave 5. So I've highlighted here the wave 3 as an ABC. This has become very likely due to the choppy price action that we're doing here. This is possible because the wave 1 can be counted as a 3-wave move. So again, here you have here an ending diagonal. Each of these subwaves has 3 waves. Wave 1, ABC. Here as well, ABC. Here as well, A, B, C. So this is the messy price action that we have, and that also explains why it's so messy, because we have to do here, we have the situation that we are facing a diagonal pattern probably. Okay, of course we can review that and maybe have to change it, but at the moment this is how it's looking. That leaves the problem that we don't really know how this is now carrying on. So it's best to look at certain key support and resistance levels. So we have within the wave 3, this is where we are. By the way, target for the wave 3 remains what it was before. Here around the 17K level, maybe a little bit higher, but round about the 17K level. We have here 2 options in the wave 3. We've got the red count, which is A, B already complete, and then C down. The problem is with this count that this move down currently looks corrective, which means it probably isn't a wave C unless, again, we have a diagonal in the wave C, and I don't want to make it too complicated. But what we need to understand, there is definitely a chance that, okay, here A, B, C, and we're now coming down, very much possible, especially as we've broken below this low here at 18.9K, even though we've recovered it. But this already shows us that there's definitely pressure to the downside. But it could also be that, yeah, indeed, this was the wave A, but the wave B in red wasn't finished, and the wave C is still to follow. So that actually, that wave B is going to be up here, and we have a larger ABC within it, if that makes any sense. Probably not, and you might be completely confused, but I just want to point out to you that there is definitely a chance that this here will make another leg up before we come down in a wave 3. And ideally, that leg up is constrained by 20.2k. If we break above 20.2k, there is another count that becomes very likely, but they are all pointing to the downside. Yeah, you need to understand that this chart has downside pressure until we manage to break impulsively above the $22,100 level, which is somewhere up here. So until that level breaks, however high we go, limited, as long as we stay below 22,100, I will not flip bullish. So the other count that's possible, if we break above the $20,200 level, is this one. And it's basically what I've just explained to you, just looking a little bit differently. Wave 1 down, wave 2 up, 3, 4, 5. This is where we don't count wave 5 as a 3-wave move. But we have the possibility that we have here an ABC where the C wave is going to push higher, okay, before we come down. So we just need to be fully understand that there are two key resistance levels, 20.2k and 22.1k. Above 20.2, this would unlock prices all the way up to 22.1, but only if we get above that, we are going to flip bullish. As long as we stay below 22.1k, downside pressure and lower lows expected. And I think we need at the moment, we need to give Bitcoin a bit of room, and we need to have an open mind for different possibilities, especially given tomorrow's Fed announcement that could shake the chart up, that could distort the wave relationships. So at the moment, really, it is this swing high at 18.7k in the very short term, 19.7k. If we go above 19.7, it makes it very likely that we are going to see an extended wave B, A, B, C. And then we just need to see if it breaks 20.1k or not. And if we manage to stay substantially below 18.9k, this swing low, then it's a very good indication that we're heading down straight away. But at the moment, again, we're sitting a bit here on the fence. We broke that 18.9k level briefly, but we've reclaimed it. But the trend is still down. So it will be a very interesting next few hours, and 24 hours definitely. And I think they should give us some more clarity. Okay, and that's my update about Bitcoin. Hope you liked it. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye-bye.